Everyone thinks the stock market was born in London. It wasn't. The accepted story goes like this. Modern finance emerged gradually, shaped by centuries of banking innovation. The Dutch East India Company, the VOC or Verenigd Oostindische Compagnie, was just a trading outfit. Successful, sure, but really just merchants sailing spice routes, making profits, sending dividends home. A commercial enterprise, nothing more. That's the version most textbooks lean on. Here's where it holds up. The VOC did operate spice routes. Founded in 1602, it did monopolize nutmeg and clove trade. It did print money, literally and figuratively, but that's where the accepted story breaks. Because to fund those voyages, the VOC did something no corporation had ever done before. It fractured ownership into tradable shares and sold them to the public. Before the VOC, you owned a business entirely or not at all. The company needed capital around 5 million guilders to launch, too much for one investor, too risky to borrow, so they issued shares. Ordinary people bought them, nobles, merchants, even widows, and suddenly ownership became liquid, divisible, tradable. That was the rupture. The VOC's shares began trading on the Amsterdam Exchange in 1602. Prices fluctuated wildly based on ship arrivals, piracy rumors, spice yields. Investors speculated, some got rich, others lost everything. It wasn't just commerce anymore, it was a market. A secondary market where shares changed hands dozens of times, untethered from the company's actual operations. The machinery of speculation had arrived. This mattered because it proved something radical. You could raise capital by slicing ownership into pieces and selling them to strangers. You didn't need a king's patronage or a family fortune. You needed a ledger, a market, and trust. The VOC became history's first multinational corporation precisely because it was the first to weaponize public capital. That's why it costs what it does, or rather, why its shares cost what people believe they're worth. The implications rippled outward. Other nations watched. Britain launched the East India Company in 1600, but it took decades to match the Dutch model. France followed. By the 1700s, joint stock companies weren't anomalies, they were the blueprint. The VOC had cracked the code: separate the owner from the operator, make shares tradable, and you've unlocked infinite capital. Wall Street didn't invent this. Amsterdam did. The VOC's real legacy wasn't the spice profits. It was proving that markets could be built on abstraction, on the belief that a piece of paper represented future value. That belief created the modern financial system. Every stock you see today, every IPO, every public market traces back to Amsterdam, 1602, when ordinary people bought shares in a ship they'd never see. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe. Each week we uncover the financial manias that rewired how money works and why understanding them changes how you see today's markets. This video is for educational and informational purposes only and is not financial advice. Always do your own research.